Hey there, fellow traders. Welcome back to Insider Financial. I'm Alex Carlson, and if you're looking to dive into the world of low float stocks and short squeezes, you're in the right place. Before we get started, don't forget to like this video, subscribe to our channel, and hit the notification bell so you never miss out on valuable insights. Now, let's jump into the world of low float stocks. First things first, what exactly are low float stocks? A stock's float represents the number of shares available for trading in the open market. Low float stocks have a relatively small number of shares available, which can lead to increased volatility and in turn present unique opportunities for traders. Let's explore some key characteristics of low float stocks that every investor should be aware of. These stocks tend to have higher volatility, making them appealing to traders seeking quick, short-term gains. However, this volatility also poses higher risk, so it's crucial to approach low float stocks with a well thought out strategy. Now let's talk about the risk and reward aspect. Low float stocks can experience significant price swings, offering the potential for substantial profits. On the flip side, these stocks can be vulnerable to manipulation and can result in rapid losses. It's essential to have a clear risk management plan when trading low float stocks. Moving on to strategies, there are various approaches to trading low float stocks. Some traders focus on momentum, jumping in on stocks with high trading volumes and positive price trends. Others prefer a contrarian strategy, capitalizing on overreactions in the market. Whichever strategy you choose, thorough research and careful analysis are key. Speaking of research, let's emphasize the importance of due diligence when dealing with low float stocks. Since these stocks can be more susceptible to pump and dump schemes, it's crucial to investigate the company's fundamentals, news catalysts, and overall market sentiment before making any trading decisions. Now here I have a screen on Finis.com. This is my low float runner screen. It's focused on stocks with floats under 20 million, and they are in order of the day's gains. And you can set it to refresh so you can see which stocks are running. You dive in here, the big runner on Friday was RCAC, which was up 91%. You zoom into RCAC, and you can see that the shares outstanding are 16.5 million, but of that, only 4.05 million are available for trading. And the stock opened at 1063, dipped down to 1034, ran to 1090, then closed at 1080. Now, what I was saying about in terms of strategies, some people focused on the momentum. They look for chart breakouts, etc. Then you also have traders that all they do is shorting, and they're looking to short these overreactions. What I found with low floats, it's very, very risky to short low floats when they are running on the first day of the run. Typically, you get the 1 day run, maybe 2 days, and then it pulls back, and that is the time to short, because what ends up happening is it establishes the day's range on the initial pump. There's been a history of stocks just absolutely destroying short sellers, with that have the low floats. DWAC comes to mind. That's the Spac that was merging with Trump's Truth Social. It was trading at 10, ran all the way to over $100 on that trading day. It ended up being a great short, as you can see here. The stock is now trading at just $17, and if you zoom out on a weekly here, you can see what I'm talking about. This was the week that it happened. The stock ran all the way, opened at $9.95, ran all the way to $175, closed at $94.20 on the week, and then the short ended up working out. But for those that were trying to short, at $15, $20, they got absolutely wrecked. So that's why it's very important, in whether you're going long or whether you're going short, that you have a clear risk management strategy in place. And moving on to trading short squeezes. So what exactly is a short squeeze? In simple terms, a short squeeze occurs when investors who have bet against a stock by short selling it are forced to buy shares to cover their positions. This sudden surge in buying activity can lead to a rapid increase in the stock's price, creating a squeeze effect for those who are short. It's like a domino effect of buying that can fuel a powerful upward momentum. Before we dive into how to profit from a short squeeze, let's look at the key elements that contribute to this phenomenon. Short interest, which is the percentage of a stock's float that is sold short, plays a crucial role. The higher the short interest, the greater the potential for a short squeeze, especially when positive news or unexpected events trigger a rush to cover these positions. Now let's break down how short squeezes happen. Imagine a stock with high short interest starts to show signs of strength or positive news hits the market. As the stock price rises, short sellers start to panic, fearing more significant losses. To limit their losses, they rush to buy shares, creating a surge in demand that further drives up the stock price. Now, the million-dollar question, how can you profit from a short squeeze? There are a few strategies to consider. One is identifying stocks with high short interest and monitoring them for potential positive catalysts. When positive news hits and a short squeeze seems likely, consider entering a long position to ride the upward momentum. However, it's crucial to approach short squeezes with caution. The market can be unpredictable, and not all short squeezes play out as expected. Always have a solid risk management strategy in place, set stop-loss orders, and be prepared for the possibility of a reversal. Remember, timing is crucial when trading short squeezes. And here is my screen on short squeezes. This is on finviz.com, and this is focusing on the float, high float, short interest as a percentage, over 20%, meaning over 20% of the float is short. And I have it labeled by the day's top gainers, and you can refresh this and have it being updated throughout the day so that you can see which stocks are running. Then you can see what are the catalysts, if any, are contributing to that increase. NXU was the big runner on Friday, was up just 20%. Is again, it's a difficult market, which I've been talking about on the channel and talking about how to trade this. So go ahead and make sure you subscribe to our channel. But NXU, you can see here on Finviz, short just 350,000 shares are in the float, and of that, 31% of the float is short. So that is why the stock ran on Friday. It was from a short squeeze. And then, as we wrap up today's trading discussion on trading low float stocks and short squeezes, remember that while these stocks can offer exciting opportunities, they also come with increased risk. It's essential to have a well-defined strategy, conduct thorough research, and stay disciplined in your approach. At Insider Financial, we cover all of these strategies with alerts, updates for our subscribers. And what we do is we put those stocks on their radar, on our subscribers' radar, with potential outsized moves. As I repeatedly stated, there are always opportunities in the markets daily. The important thing is identifying which stocks to be in to grab that money. The key is trading green, not red. We're looking for those momentum plays that have catalysts. It's all about finding the momentum before it happens and riding that wave. That's what we're doing here at Insider Financial. And to get our small cap reports, we cover low floats, short squeezes, recent IPOs, biotech FDA plays, AI stocks, EV stocks, lithium stocks, and insider buying. Click that link in the description or go to signup.insiderfinancial.com or sign up on any of the pop-ups on insiderfinancial.com. No spam. Your info is never shared. Unsubscribe anytime. You can even sign up just to see the level of research we do here at Insider Financial and unsubscribe. And remember, Insider Financial and I are not investment advisors. This video does not provide investment advice. Always do your research, make your own investment decisions, or consult with your nearest financial advisor. This video is not a solicitation or recommendation to buy, sell, or hold securities. This video is our opinion. It's meant for informational, educational purposes only, and does not provide investment advice. Past performance is not indicative of future performance. Thanks for joining me today on Insider Financial. Hit that subscribe button and ring the notification bell to and never miss the latest insights and strategies. If you have any questions or topics you'd like us to cover in future videos, leave a comment below. Until next time, happy trading. This is Alex Carlson signing off. Bye-bye.